Okay, we should have audio for a reason. Thank you for that heads up. It looked like OBS decided to change my audio configuration on its own, but you should be getting my audio coming through the simulcast over on YouTube. So welcome back for a reason. I was in the process of giving you a quick shout out. I know you're excited. Today we have on deck our tool spotlight for the Supply and Demand Pro. Awesome. Well, we're going to fire up today's session. It is 1 minute after the hour. So welcome everyone to the Monday edition of Ninjacators' new weekly live event called Profits at Noon. My name is Nate, co-hosting these sessions with our very own Richard Krugel. If you're new to these sessions, our goal here, our objective is to show you the levels that we are stalking for entry. This is what we call our levels to lock. So we're going to share our levels to lock across our 6 favorite futures markets, and we're going to do our best to steer you clear of any market traps, news bombs, or surprises that could be waiting around the corner. So you're going to see lots of great live analysis, lots of valuable insights today. And in addition to that, actionable levels that you can copy and stalk along with us. So we do, of course, encourage you to attend our follow-up sessions. Just a quick reminder, we are live 3 days a week, Mondays, Wednesdays, and Thursdays at noon Eastern Time. So be sure to follow up with us on Wednesday after today's analysis. And then, of course, as mentioned, today's special segment will be a tool spotlight on Ninjacators' very own Supply and Demand Pro tool suite. So stick around for that. We'll clear some room for any Q&A. If anything comes up, feel free to fire away there in the chat, and we'll be happy to take care of that for you. But as for now, let's fire up today's session. Let's get to those levels to lock. So Richard, if you would, sir, take the reins for today's session.
Awesome stuff, Nate. Thanks very much, and welcome everyone. Hope you all had a great weekend. An expanding triangle correction. We've been tracking this sequence to the upside again for quite some time. Just basic recap. We're looking at first wave high, second wave, third wave, fourth wave triangle. Direction of what the ES should be doing. And yeah, so price has been slightly below today's pivot point at the open, even during Sunday session when the markets opened. It already reached R1 at 4,219. It tried to move lower again, found some support, and looks like it's currently heading higher again. So if we see a break above today's R1, we might see a move into R2. And we also got a bit of confidence between R2 and today's projected
Hey, Richard,
high.
sorry to cut in on you. It looks like we're having a more audio issue going on over YouTube, yeah. So I was just working on that. But also, it looks like the screen share is not currently up.
That's strange. It must have disappeared.
There it is.
Is it
it's
back on now?
Yep. Looks
Sorry
good.
about
and
that,
it looks
guys.
like we
obviously,
yeah.
Great way to start a Monday, I suppose.
Sure, yeah. It seems like all the software has betrayed us today. It looks like audio is passing successfully from both sources over to YouTube, though, and screen share is back. So let me step out of your way, and you can continue.
All right. Hopefully, it's not an internet issue here. But in any case, just okay. Quick recap. Price headed higher. finally broke above the high that was set on the 1st of May. And that, in my mind, confirmed this expanding triangle that we've been covering and following for quite some time. So obviously also looking at a blend of a bit of market geometry analysis, price in relations to our levels to lock, as well as, like I said, this pattern. So that pattern, in my mind, has confirmed. Again, price broke above the 1st of May's high. So yeah, we're still expecting that this sequence might run into resistance at some stage soon. Later, we could potentially look at the higher or bigger picture view if you guys are still keen to look at that. So yeah, I'm still thinking there is some more upside potential on the ES. It's just that I'm very, very cautious that we are in that sort of final fifth wave sequence, and not final fifth wave in the bigger picture, like all hell's going to break loose and we see a decline. It's just to potentially see a decline, maybe a little bit deeper, that could retrace mid-March. Right, so that is the ES. I don't know if you guys probably missed all about what I said about the levels to lock. Just give a quick recap there again. Price during Sunday's session and today's session for the last, where was it, about 3 candles. It was hovering below today's pivot point of 4,205 and then made a quick move higher to R1 at 4,219. That was a bit of a flush lower, but it might have set a new higher low. And it looks like price is heading back to R1 again. So still a bit cautiously bullish on the ES, just sort of, just being cautious that if this is a fifth wave sequence to the upside, that we might see a deeper decline at some stage soon. Right. NQ obviously been leading the pack in strength here on the industry side of things. Last week, we were looking at potential area of resistance. Price sort of overshot that, moved lower again, and lo and behold, where did it find support? It's been finding support at this upper median line, this green line here. 1 occasion, 2 occasions, it's trying to make its way back up again. Also made a move above today's pivot point of 13,871. It sort of just closed at the previous candle, although it wicked slightly above today's R1 at 13,929. It did not make a new high above last week's high yet, but I think that is still potentially a whether that happens today or tomorrow, we'll obviously have to see by Wednesday when we recap things again. But I still think NQ's potentially got enough legs to reach this upper red warning line. Again, whether that happens today or by Wednesday, we'll just have to wait and see. So we've got today's projected range high, the first standard deviation, which is about 14,080 3/4, sort of in line where we have this upper red warning line. If you can remember from these sessions before, quite often these warning lines, as I call them, quite often catch like the extremities of very strong trending markets and then potentially going to get a deeper correction at some stage. Whether that happens or not, we'll obviously have to wait and see. Again, a lot of lines on here, but yeah, we'll just have to, at some stage, probably get rid of them as well. But price has still been following this angle of ascent for quite some time. Again, NQ being much stronger than the other indices, the ES and the YM and Russell. So I do expect support to potentially hold at that upper median line. But as you can see at this dashed line or this dotted line to the upside, it's been acting as a little bit of resistance right now. So if price breaks today's range, potentially see that flush towards R2 or that projected range higher, maybe even higher towards that upper red warning line. Okay, and that brings me to the YM. Last week, we were talking about the possibility that price broke out of a ending diagonal, and this ending diagonal was potentially just part of a zigzag correction to the downside. Obviously, very evident here that the YM's been way weaker than the ES and the NQ, but since price broke out of that, it found resistance a few times here at this lower median line, this green one sloping to the upside. We had a slight break above it and we pulled right back into it again. So on a smaller sequence, although I don't have a smaller chart here, we potentially have a 5-wave sequence here at the moment, and this could potentially be corrective in nature, meaning that we could potentially have bottom over the near term and potentially see a larger move back to the upside again. That being said, this whole thing with the debt ceiling and the talks, or when they're going to finally decide, you know, if they're going to raise it or whatever the case might be, sort of like hanging in the, you know, sort of like in the back of investors' minds. So yeah, quite whippy at the moment. We might have seen, I don't know, potentially a 61.8 retracement. Yep, just by visually looking at that, where this current 4-hour candle already reached slightly below today's S1 at 33,322. So keep an eye on the YM. I think if it moves above today's pivot point at 33,527, we might get that next move higher that we've been anticipating for quite some time. Again, just be careful that price might, again, I don't know if you have these lines on your chart, potentially not, but that's obviously why we have these sessions as well, that the lower median line here might act as resistance again. But if you look at price pattern or the sequence to the upside here, if this holds as a higher low, then we could potentially expect something to mimic this first move to the upside in range, maybe even making all the way back up to 33,973 plus minus. And if it's behaving impulsive, then that would suggest that we potentially have first wave high, second wave low, and impulsive third, fourth, and fifth to build to the upside. Again, it's been way weaker than the ES and the NQ. It's really sort of very messy price action here on the YM. So this might, like I said, be a higher low, but be careful. I would like to see price break above today's pivot point today, above today's range, and it needs to start behaving impulsively for me to start thinking that a higher low has actually indeed occurred. That brings me to the Russell. If you've been following my analysis for quite some time now, you can clearly see on this chart the Russell's been extremely messy, sideways sort of action. Pretty large range here, so not much to say or much to update on the Russell really, apart from the price really needs to break out of this range. Whether it's going to be higher or lower, really can't say, and that should probably give us the direction or set the direction or tone over the near term for us. So you've seen I've drawn in these upper and lower trend lines. There's still the possibility that this could all just be some sort of a triangle formation. But unfortunately, I think if it is a triangle occurring after such a strong decline, that the outcome could potentially be bearish for the Russell. So, like I said, too early to say that it is a triangle, but quite often with this sort of analysis, you've got to try to keep ahead of what price could be doing. And when it does then follow that analysis, you then act accordingly. From the levels to lock perspective, price has made its way above today's pivot point at 1,783. It's just reached at the current 4-hour candle, today's R1 at 1,797, and it looks like it's heading towards today's projected range high at 1,802. If this is some sort of a triangle, be careful, we might not see price break above this high. But again, like I said, it's way too early for me to think that this is a triangle. Price would need to find resistance somewhere, head lower again, find support again, and then when you get a bounce to the upside, at that sort of time, it becomes a high probability triangle. But still lots of time for that to potentially play out. Again, not one of my favorite markets at the moment to trade. Very whippy and sort of sideways in a range. Right, that brings me to gold. Gold finally broke out, as we probably all know, out of this channel that we've been following for quite some time. We correctly identified a triangle sort of earlier in beginning of March, and here too we've been following a sequence that potentially, well, we were tracking a 5-wave sequence and warned that if we do see a 5th or 5th wave end, that we potentially expect a deeper decline. Price sort of moved lower, still respecting this slightly upward sort of sloping channel, but then finally broke below that. So it had a pretty strong decline to the downside, and still expecting that we could potentially even move deeper or correct even deeper to against this sequence that we've seen here. Let me just look at the Elliott wave, the retracements levels. It's hit 50%. I think it potentially still reach 61.8 or maybe even move deeper than that. If this is a corrective move to the downside, it does look like we got a very strong impulsive wave, potentially going to see a 5-wave sequence, maybe another correction to the upside, and then another decline later stage. Obviously, all of this can change. It's obviously why we keep an eye on these levels to lock, as well as a bit of the market geometry, etc., etc. That being said, price being above mostly today's pivot point, which is at 1974, but stuck in a little bit of a range here. Yeah, so not really sure where gold is going. I think if it breaks below today's lowest part of today's range, we could see a flush towards S1 at 1961. But again, if we see a break above today's range, we could see a move higher to R1 at 1992. So I'm expecting at some stage a higher sort of move to the upside, but potentially that it will just form a lower high instead, with another leg lower to follow at a later stage. Crude oil, obviously, as you all know, crude oil has been slaughtered here towards the beginning of this month, where it found support, pipped the previous low that sort of formed in mid-March, and we had a strong bounce back to the upside. So I'm still viewing whatever this is as potentially corrective in nature. I know last week we were looking at a potential area of support, which was just a 38.2 retracement, and we counted a sequence, or I did, of a potential 1, a 2, maybe a 3, and this was corrective in nature. And price sort of found beautifully support within that area, this green zone that I've marked here, but it's since sort of made its way slightly higher. It does look like a 5-wave sequence. Potentially this could be corrective, i.e. that might make a higher low, and that the next move higher could potentially follow. Now, still looking at, or my bias over the near term for crude oil is still bullish, but in this scenario, I'm thinking potentially just a bounce. It could still extend a little bit higher, but being corrective in nature, I price retracing a decent portion of this decline. All right, so although price has been below today's pivot point at 72.22, it already found support at S1 at 70.86. So I think if we get a 4-hour close above today's pivot point, we could see a move towards, which is not too far away, today's projected range high at 72.86, potentially take out R1 at 73.26, and it'll be on top of this range again. So we'll have to see if price can actually break out of that. But again, sort of a near-term sort of thinking here is that we could potentially still see something like this. Unless things change, obviously, we'll have to change the, our outlook. But for now, just still bullish on crude oil and still expecting potential higher prices there. Right, so hopefully my screen is still sharing, Nathan. Can you guys hear me okay still?
Yep, looking and sounding great.
All right, sorry about that. I just don't know what happened there. Anyway. Right, guys, that's really not too much has changed since Thursday's update. So that's pretty much it from the analysis side of things on the markets we normally follow here with at the profits at noon and our levels to locks that we stalk. So if there aren't any questions, then I'll be happy to go over to the Supply and Demand Pro tool spotlight for you guys. I know we've had, what was it, for reason, been asking us to demo this tool for quite some time, and I do think someone else also asked for it, so finally it is here, and I'll be happy to show that to you guys. So if there's no questions, I'll be happy to do that for you.
Awesome. Yes, today is the day for Supply and Demand Pro. So that's coming up in just a second here, guys and gals. Before we move away from today's analysis, one last chance if you have any questions whatsoever. Remember, there's no such thing as a dumb question here. We are always happy to discuss this with you. So feel free to fire away there in the chat. Even retroactively, if something comes to mind in a few minutes here, we'll be happy to stick around, clear a couple minutes at the end of the session to ensure that everybody's taken care of. But as it stands currently, it looks like we're ready to move on to the tool spotlight. So, Richard, I will fade into the mist here, get out of your way. And for a reason, I know you're primed and ready. So here we go. Let's take a look at the Supply and Demand Pro here with Richard.
All right, Nathan, you can still see my screen, right? Nothing disappeared, yeah.
Nothing has disappeared. We are all good to go. All systems go.
All right. Yeah, so I do have the Supply and Demand Pro software loaded on the chart. I'll just jump through the different tool sets that's included in this package. You'll probably see there are a few different buttons all here. I'll go through all of them. I've set this to a 5-minute time frame. It really works on any time frame you want to, when you'll be scalping or swing trading, day trading, whatever the case might be, and it also works on any market. So what the Supply and Demand Pro actually does is that marks zones. Again, I'll show you that on the chart, on these live charts. So it marks zones of extreme supply and demand, and these zones are basically calculated by looking at volume, blocks of volume, and then also order flow activity. And then these zones can also be visualized according to your risk tolerance. And that's all fully customizable. Again, I'll go through all of these buttons, so just stay tuned for that. We'll get to that. And then we'll also have an auto entry function, so which is really cool if you want to have your ATM strategy take over and actually get into a trade automatically when price touches one of these zones. But you just need to, I'll also go through that. There are a few things you have to consider when you also use that function. And again, like I mentioned, it also works on any chart or time frame. Right, so let's go and jump into all of the indicators that's included here. Don't worry about this drawing tool tiles, just this one I have here. So you get what we call the supply and demand trader itself. We also got a supply and demand scalper, obviously for smaller time frames, and if you want to scalp. And we also have a real-time fair value indicator. So I do have them applied here. They're just not visibly actually set up. So I'm going to go through all of them individually. I just want to make that one visible first and hit OK. All right, so first things you're going to see here is that the tool on this time frame, again, you can use any time frame you want to. In this case, using just the Supply and Demand Pro Trader, that's that first indicator that I've showed you, or tool set. We got a supply zone plotted here on the upside, and we also have a demand zone that's been plotted here towards the downside. So as soon as you have one of those high volume sort of occurrences, blocks of volume, or like increased order flow activity, these zones will then automatically plot on your chart. And, you know, there are various ways that you can obviously trade that. I think this is just a really good example. What if it's green like this? You see, we also, I don't know if you can see that on my chart, it's a little bit black. We got light green ones here in the back. So as while these zones are green like this, or like light green, or a bit more visible, it still means that they're active zones. So potentially when price pulls back into them, they might still act as, in this case, demand. Right? This is just a really great example of where the indicator plotted this demand zone here at the bottom, price moved upwards, actually missed it by a tick here. What was this? I think this was Friday's session or yesterday's, start of yesterday's session. Pulled back right in towards it, and it acted as support in this instance, and price moved back to the upside again. Now, once price actually breaks one of these zones, they will turn to a lighter green color, so that you can basically go through historical sort of instances where you had your demand zones and your supply zones, for that matter, plotted to see how price would have reacted at those zones. So I don't know if you can see this green one here properly, but this is also really a nice example of where a demand zone plotted, price pulled back into it, and resulted in a very strong move back to the upside. Obviously, depending on what you want to achieve, you want to be day trading here, or scalping, whatever the case might be, swing trading, and so forth. Again, the green ones are for your demands, and your supply ones will, in this case, sort of been plotted in a light pink color. All of these colors can be changed according to your liking, and you can also set alerts at these zones, so when price does actually touch that, the alert will fire off on your screen.
Excellent. Richard, I hate to cut in. We just had a question coming through on YouTube, and I know you're not able to see that, so I just wanted to put it on your radar. But Joe wanted to know, how many days do you need to have loaded to run the Supply and Demand Pro, or what's the optimal amount?
You know, it really depends on your sort of liking here. I like to use on a 5 minute at least a minimum of 20 days. I think 10 days will still work as well. So it's just going to basically look at your previous day's session. So it doesn't really have to rely on historical data too much to print them. I mean, the supply and demand zones only really print because of those occurrences in volume, if that makes sense. So this, for example, these supply zone that printed over here yesterday, when was this, on Friday, you know, it didn't have to, it wasn't calculated by looking at past 5 days prior to that, if that makes sense. All right, so it plots in real time when it actually finds those occurrences in volume for you. All right, so yeah, you can, I think if you just visually want to go back and visually backtest, you know, to have a look at previous occurrences where price moved into an area, etc., if they would have worked out. So you can more sort of like, you know, strategize a trading strategy accordingly. So I like on a 5 minutes to load, I think it's mostly for all my charts, around 20 days or so. Obviously, if you use a 1 minute, you could probably go towards 10 days or whatever the case might be if you want to use a scalping sort of strategy, if that makes sense. Okay. Now, that's very basically what the supply and demand tool does. Now, you'll see here on the left top-hand side, we got this little window that pops up as soon as I press that. Now, this first sort of two options here is a trade long and a trade short. And that's to do with the auto trading function that you'll see on a top side over here. So, for example, if you, let's say, see price have pulled in earlier during today's session into an active demand zone, and you wanted to use the automated entry feature, and you only wanted to take a long, for example, you can go and click that so you won't take any shorts, or the automated trading feature won't take any shorts. All right. And then if you then, let's say, as price was approaching that area, you only have a long bias, you only want to take longs, you will then go ahead and you'll hit this button. You see how that just turned green there. So very importantly, and this brings me back to the chart trader functionality, the actual software will then, as soon as price pips or gets into that zone, take a long automatically. But what it will not do is, you know, help you with exiting, placing your targets and all that stuff automatically. For that, you still need to have your own automated trading strategy. Whether you want to trade 1 contract, 2 contracts, you have to select that yourself, right? I hope you guys understand how the automated trading feature happens here, or the ATM strategy selector here on the chart trader actually works. So this feature, very important to understand, will just take a position, whether you want to go long, short, or long and short, as price touches a zone. But you still need to go and select your own automated trading strategy, if that makes sense. All right. Next thing, we got this resolution button here. So we got an intraday mode, 1, 2, 3, and we also have a well trade mode. So basically what that means is that these zones, and what I'm set here on a 5-minute time frame, would be between 50 to 100 ticks wide. All right, and that's actually what this zone width would actually, what those buttons would actually control over there. So obviously, if you want to trade, let's say, a 1-minute time frame, and I go hit intraday mode, although I'm still in a 5-minute time frame, you'll have way more occurrences on your chart where supply and demand zones will plot, if that makes sense. But you can then go, for example, and look at this, for example, the higher you go up, the less they will print, potentially be a little bit more stronger, if that makes sense. So that's really up to yourself and what sort of, you know, your trading strategy you want to use. So that's definitely an option. And basically, it's there to, according to fit your own risk tolerance, if that makes sense. And then you can go hide your active long zones. See how that disappeared on my chart? I don't know why you would want to do that, but it's just, you know, potentially to clean up your chart a little bit. And you'll see that my historical long zones, these sort of lighter green ones here, are active. So if I go hit that, they'll disappear. So, you know, once those zones gets actually broken, let's say price broke below this zone here, this demand zone, then that zone would actually disappear on your chart unless you go and select show historical zone, long zones again. The same thing for the short zones. I can hide it like that, activate it again, and can also go have a look at the historical ones. Although I have a dark background here. Let me go. Show historical zones. It is actually on my chart. You just can't see it because I have a dark background. So if I change this to white, I've actually got 3 plotted over here. But I think you get the idea of what I'm trying to show there. They are actually there. I'm just presenting you on a dark chart because my eyes can't hold it if I have to look at a white chart all the time with a white background. So that's pretty much it from the functionality side of things. I mean, there was a few great occurrences today where, well, what not great, but one over here where price pulled way back into an active demand zone, and it was a strong reaction back to the upside. Price actually missed the previous area over here. This, in this case, a supply zone. In this case over here, we had 1, 2, 3 tests of a supply zone and eventually resulted in a very strong move down to the downside. So that would have been a very, very nice setup indeed. So again, these zones will stay on the chart until they get broken. But then you can also go look at the historical ones and either plot them or decide to hide them if that is what you want to do. Right, so very simple indicator to use, fully customizable, get those alerts on your charts, whatever the case might be, and how you would like to use it. And remember also that automated entry feature. So I'm just going to hide that one quickly, and then we can go over to the Scalper indicator or toolset. These zones are colored slightly differently. Let's go put that on quickly. And you'll see that that SDT, which is supply zone and demand trader, disappeared. And it's now supply demand scalper here on the left-hand side. And the same thing you can do here. You can go trade long or trade short, or just long or just short. And then you got your selector on the top here to activate it again, just to get you into a trade automatically. But what it will not do, again, is basically manage your trades for it. So just very important to note that. You can then go select if you want to trade strong zones only. And also if price retouches a zone, let's say you have a zone that printed over here, and you, in this case, look at this beautiful same sort of move that we've seen there on the supply demand trader indicator. You will trade or willing to trade a retest of a zone again. And then you can also just trade strong zones, whatever the case might be. You can hide that if you want to get rid of them. And just long or short, again, you now have to go activate the actual selector button on the top here. And just quickly here from the indicator setting sort of standpoint, where's that over here? You'll see that there's also a zone that can plot here that's in a different color. Again, you can change all these colors to your liking, which actually plots a weaker sort of zone. But I prefer just to trade the strong zones. Again, and you can just go select everything up here. So this is more geared towards obviously scalping the markets anyway, potentially 1 minute, 3 minute, maybe 5 minutes if that is what you want to do. But again, this is also just a beautifully visual sort of example of how price actually created a demand zone. You had to move back into it and then a reaction from that again. All right, so that's pretty much it. You guys just need really cool that you can actually trade or get into a trade automatically. But again, very important that you go and figure out where you want to place your targets, your stop loss according to your ATM strategy, so that you can manually position those targets and stop losses yourself. All right, and that brings me to the real-time fair value indicator, which is another tool set included here. Let me just go and place that on the chart here for you guys. And visible. It should actually be visible. There we go. All right. You see this blue line that just plotted on the chart here. Again, it's got a little selector box on the top here. You can go select an hourly line. I'll tell you what that is in just a while. It's actually black now. I should just go change that color again. You got an hourly, a daily, or a weekly line. The weekly line is this green one over here, and it also gives you text of which one you actually selected here. Now, this one will be quite important to actually select enough historical data, because what the real-time fair value indicator basically does is that it plots the point of control according to how many data you basically loaded on your chart. So I don't know if you guys are familiar with volume profile and all that sort of stuff, but it basically plots the weekly, the daily, and the hour point of control area. And for those that don't know what point of control means, is basically where the highest amount of volume has been traded. Quite often, if you use a volume profile, you can select, let's say, a range from a low to a high or high to a low, whatever the case might be. But what this would do is it actually automatically plots that area of point of control for you according to the amount of data that you pulled into your chart. Again, here on a 5-minute, I find 20 to 30 days more than sufficient. And quite often, your point of control is areas where price would, either gravitate towards. It can find support and resistance. For example, here on the weekly, you can see how beautifully price broke below it. It acted its resistance once, twice, broke above it, acts support in this case, moved up and down again. But in this case, it's fluctuating above and below the actual weekly point of control, or that real-time fair value. If we go to the hourly, you see it's a slightly different area. So we'll obviously use a little bit less data or historical data to figure out where that hourly point of control is, or that fair value area. Right, quite often you'll find people, let's say big traders or whatever, retail traders, either target these areas, or they want to get involved in a trade at those areas where they consider fair value would be, for example. A lot like sort of like how stock traders would, like before they buy into a stock or sell into a stock, or position, they want to figure out where that fair value might be. All right, so that's pretty much it from the demo side of things. Guys, a very, very easy indicator tool suite to use. Again, looking at all these volume occurrences and automatically plots that into your chart. Now, there are obviously different ways that some traders might want to trade that. You could wait for, let's say, a move higher, a pullback, maybe see a move higher and wait for a retest and trade long. Or here we have a small one where there was a demand zone that printed, and we have a retest, potentially go long. But I quite like to use the Scalper tool set on a time frame anywhere from 1 to 3 minutes. I don't really like doing it on a 5-minute, because I mean, these moves here, you could be in and out of a trade fairly quickly if you have a scalping sort of mindset and strategy that you want to follow. All right, so that's it. I'm not really too much to it, other than, all of this being done automatically for you. So a really cool tool to do. It's on my radar for the next on trade demand videos that we're going to be doing pretty soon on this, where I'll be live trading this supply and demand pro in real, obviously, market conditions, using different markets, potentially ES, NQ, even the micros I like trading with us, and then record those, and then give my unique spin on how I like to trade with the supply demand pro, how I actually enter into trades, where my targets are, stop losses, etc., and also very importantly, how I use my ATM strategies with that. So that is still on the radar. It is up and coming, but as it is out of the box now here, very, very cool functional tool, and probably one of our very or most popular tools in the Pro series here at Ninjacators.
Excellent. Well, thank you so much, Richard. I know it's very much appreciated by myself and the audience alike. So it was great to finally get this out the box in one of these sessions. I know we've been looking forward to it. We, of course, want to make room for any questions you might have relating to that. I know For Reason sent over his thanks, Richard, by the way. I just want to put that
Oh,
on your
you're
radar.
welcome. More than welcome.
So yeah, it was definitely great to have it. You can see I shared a link in the chat there, and that's what Richard is sharing on his screen now. I'll
Yeah.
just make sure that's available in the chat again. But basically what this does, every time we do a tool spotlight, if you've been with us before, what we like to do is bring along an exclusive link that's going to give you access to the special launch prices for these tools. So if you went on the storefront, you may notice we actually do have it listed, I believe, at $897. So this is going to shave off a good $500 for you right there.
Yeah. Oh, a huge discount.
So that's just something typically that we like to do. If it's something you're interested in, just hang on to that link. We are, of course, happy for, to work through any questions you might have here or to revisit any of your favorite tools in future sessions. And that's just something we'll always have for you, is always some sort of special link that's going to get you in the back door, that's going to get you the special price, even when it's not available to the public. But yeah, having said that, again, if you have any questions for us before we wrap up today, we're happy to dive into that. But additionally, would like to encourage you to join us for our future sessions. We will, of course, be back on Wednesday with updates on today's analysis. And then I'll have to see if our buddy Craig Hill should be coming back to give us some updates on his Robot Lab portfolios. And I know they're also working on a few things over in the Robot Lab camp. We'll have some exciting news rolling out about some cool updates and things that are coming your way. So we'll look forward to having Craig Hill back in the house. And then, of course, if anyone has any requests for a Pro Series tool, any of our strategies or tool suites, we're more than happy to unbox those, break them out here in this session, and let you see how they work.
Yeah, guys, like Nate said, whenever you want to see one of the tools we haven't covered yet, we'll be happy to cover it again, then please let us know. If you just give me a little bit of a heads up so I can just, go get my charts ready and everything, then I'll be more than happy to show that for you in the next session.
Sure, yeah, and barring any, we do like to have special guests here as well. But typically we like to do a tool spotlight at least once a week if we can.
Yeah.
So, your feedback will go directly towards that project. So if you can't think of anything today, no worries, no pressure. You can always follow up with us via our support. There's a handy form right on the website, or there's a phone number plastered all over the place where you can reach out, get in touch with us within office hours. And they'll be happy to pass along any messages to us if you have any requests, anything of that nature. But yeah, in the meantime, we just encourage you to hang on to that link if this is something you're interested in. If you want to try out Supply and Demand Pro, definitely the better way to do it. Do not go to the storefront. Use our special link. And yeah, I guess that brings us to the end of today's session. We're about a quarter to the hour here, so we'll go ahead and wrap up. I just want to take a second to thank everyone that's joined us. If you're new to these sessions, welcome. We very much enjoy having you. It's great to meet new faces. As mentioned, we will be back on Wednesday, so we hope to see you Wednesday at noon Eastern time for the next Profits at Noon session. But in the meantime, everyone have a great week. Happy and safe trading along the way. We'll be back to give you some updates pretty soon here. But Richard, I'll give you one quick opportunity for any parting wisdom as we're on the way out the door.
Yeah. Watch the ES NQ, expecting potential declines. Still bullish, but cautiously bullish. I don't know how this whole thing with the debt ceiling is going to work out. Is there going to be some sort of solution, whatever the case might be? But yeah, we'll recap everything again on Wednesday. See where the market's at in relation to our levels to lock. And yeah, I don't really have too much to say other than that, Nathan. Yeah.
That's fair. Excellent. Well, I got to go check my trade in the ES right now. Beyond that, thanks everybody for joining us, and we'll see you again on Wednesday for Ninjacators' new weekly live event, Profits at Noon. So thank you so much, everybody. Take care. We'll see you soon. Bye-bye.
Thanks, everyone. Take care. Bye-bye.